In this video, I'm going to share with you my step-by-step trading strategy that has allowed me to get funded over $1 million. This is the exact trading system that makes me, on average, $25,550 per month. And what I've done is I've broken the system down into 5 simple steps. This system is simple, fully mechanical, fully rules-based, and takes all of the guesswork out of trading. But I don't want you to take my word for it. Here is a sneak peek of some of the incredible results that my exclusive members have achieved trading this exact system. For those of you that are new here, my name's Liam and I'm a mathematics and finance graduate from Newcastle University. And I've been trading, investing, and coaching in the financial markets for the last 8 years. So with that being said, let's dive into this video. Okay, so step number 1 is the most important, yet it is often the most overlooked. And step number 1 is identifying directional bias. Because a huge problem that so many traders are facing is they turn up to the market, 1 minute they're long, 1 minute they're short, and they just keep flip-flopping, they keep chopping and changing, and they look back at the end of the day and they're looking at the P&L, and they're like, what the hell happened? You know, you've took 15 trades, some of them long, some of them short, and you don't even have a bias for the day. And so step number 1 is a fully mechanical way in order to take all of the guesswork out of your trading so that you can define your directional bias in a fully systematic way. So we're looking at the US 500 on the 15-minute time frame. And I want to make it very clear that this is a one time frame strategy. So you don't need to look at the higher time frames. You don't need to drop down or do this kind of multi-time frame analysis. Your analysis, your executions, everything's going to be on the 15-minute time frame. So what I want you to do is head over to the indicators tab at the top of your screen. It's this one right here. And I want you to type in EMA 20, 50, 100, and 200. It's this indicator right here by Dr. Sweets. Click the indicator, add it to your chart, and add it to your favorites. Now that it's applied to your screen, double click the indicator and you can uncheck the 20. So this is the 20 right here. You can uncheck this box. And then you're left with the 50, 100, and 200 EMA. The 50's in green, the 100's in blue, and the 200 EMA is in red. So when the 50 exponential moving average, so the green one, is greater than the 100, this is the blue one, which is greater than the 200 exponential moving average, this indicates to you as a trader that we have a long daily directional bias. And so this means that we are only going to be looking for long positions. When the EMAs are the other way around, so for example, the 50 EMA is less than the 100, which is less than the 200, this is a period of price where we would be sell bias in this market, and so we would only be looking for sell positions. We don't care about the gradient of the EMA, so we're not bothered if they're heavily sloping to the downside. All that we really care about is, are the EMAs in order? If the answer is yes, then you have a clear bias in the market. If the EMAs cross over, so for example, in this period of price right here, you can see that the 50 crosses over the 200 EMA and the 50 also crossed over the 100 EMA. And so in this period of price, we have no daily directional bias. We have no bias in this market. So in this condition, you would be sitting on your hands, you're going to be waiting patient, and you would just be not looking at positioning yourself into the market. This is a huge problem that so many traders are facing, right? They don't have the discipline, the patience to sit on their hands and wait, and to come back in the following session or the following day in order to look for the right market conditions. So that's the example of the 3 different market regimes, right? We have a bullish market regime, a bearish market regime, and we have a no bias market regime. So in this example, we're looking at a market with a bullish market regime, right? Because the 50, 100, and 200 EMA are all in order. Because so many people are relying on like daily fair value gaps, weekly fair value gaps, daily order blocks, 4-hour liquidity, like so many different sort of discretionary ways in order to identify a bias. And it's like, okay, well, I'm just going to keep it simple. I'm just going to look at the 50, 100, and 200 EMA. That's going to tell me what the flow of the market is. And we can define this in a very mechanical, rules-based way. Okay, so step number 1 was amazing, but if you don't understand step number 2, you're never going to know the sort of levels that you want to be trading from. And step number 2 is identifying your point of interest. So again, this is a huge problem that so many traders are facing. They may know the flow of the market, they may have a directional bias, they may know where price is more likely to head to, but they don't have a level or levels that they're looking at trading from. And so what ends up happening is you just randomly sort of position yourself into the market. What ends up happening is some form of manipulation happens. You then get stopped out. And then you look back at the end of the day and you're like, well, if only I had a level of liquidity or a point of interest that I was looking at, I could have prevented so many of these losses from happening. And so identifying a point of interest is absolutely crucial in the market, and it makes it really easy to ensure that you're sticking with your plan. Okay, so I want you to keep in the back of your mind that we're bullish in this market. So I've just removed the EMAs for simplicity. And so a very mechanical way to identify our points of interest is to use the previous session's highs and lows. So as you can see, we have the Asia session. This is from 7 p.m. until 12 a.m. midnight. And we have the London session from 3 a.m. until 5 a.m. Eastern. So I want to make it very clear, this is New York timings. And when you're bullish in the market, your point of interest is always going to be the session lows. When you're bearish in the market, your point of interest are going to be the session highs. So as you can see, we're turning up to a New York session. Okay, we're turning up to a New York kill zone. This is between 8 a.m. and 10:30 a.m. Eastern. And this is going to be your time of execution. So we're only going to be looking at taking trades during the New York kill zone, and you can also take trades during the London kill zone as well. So in order to identify our POI, our point of interest, what you're going to do is mark on the London low. So we can do this right here. And this is just the range from 3 a.m. until 5 a.m. Eastern. And so this is our London low, which is also known as our POI. So now that we can define our points of interest in a very mechanical way on the charts, and it also makes it very simple, right? Because we don't have like millions of different lines on the charts. You know, at most, you're going to have two different POIs. You're going to have the Asia low and the London low. And like that's the most you're going to have on your charts. It helps to keep things very basic, very simple, and it helps you to make very accurate and logical decisions. So step number 2 is incredible. But if you don't understand step number 3, you will never be able to time the market correctly. And so step number 3 is a session-based manipulation. And this is where so many traders are going wrong. Have you ever entered a trade? Let's say, you entered the market up here. You think that the market's going to go higher. And then what ends up happening is price rolls over, stops you out, and then price continues in your intended direction. Well, this is simply to do with session-based manipulations. And it comes back to market theory, and it's kind of like, well, if you cannot see the liquidity, it's extremely likely that you can become the liquidity. So all that we're simply looking for during a kill zone, I mean, even the manipulation or the session-based manipulation, this can occur before a kill zone as well. And so what we're looking for is price to come down very patiently, manipulate below the POI, below the point of interest. This is what we call a session-based manipulation. And what this is going to do two things. Number one, this is going to stop out any early buyers, right? So if you're positioned in London, maybe you're positioned in Asia, well, you're going to have a stop loss below the London session low. And so what this is going to do, this is going to liquidate these traders. This is going to stop them out. And this is going to force these buyers to sell at current market price. And so this is going to create a huge inflow of sell orders into the market. This is number one. Number two, when price gets down here, closes below or wicks below, it doesn't matter. This is also going to induce traders short into the market, thinking that this is a breakout to the downside. And so this is going to further induce more sell orders into the market. So what we know right here is, okay, a lot of people are going to get short right here as price manipulates below the London session low. This is what provides the liquidity and fuel for the bigger players, institutions, in order to move the market in the intended direction. Because as we know, the draw on liquidity, as we know, the directional bias is to the upside on this market. Okay, so we're waiting so patiently. We're waiting for price to come down. We're not rushing it. What you can do is set an alert at the London session low, wait for price to get down here, and then once it gets here, you can act accordingly. So it's pointless staring at the market when the price is all the way up here, when you know that you want to see the manipulation below the London session low. Okay, cool. So we've seen the manipulation, and this leads us on to step number 4. And step number 4 is a confirmation. And really the logic is like, when you've seen a manipulation, How do you know when the manipulation's over, right? You see price come down, you see price manipulate below the London session low. Like, how do you know when this is going to stop, right? Price could easily just keep continuing to the downside. And that's why it's so important that we have a confirmation so that we know that buyers are actually stepping into this market and essentially they're showing their hand. And so all that we're waiting for, it's really, really simple. All we're waiting for is a 15-minute bullish confirmation. And so our confirmations, these need to occur between 8:15 a.m. Eastern up until 10:15 a.m. Eastern. Any confirmations outside of this window are not valid, and so we would not be looking at taking trades outside of these windows. So as you can see right here, this confirmation came at 10:15 a.m. Eastern. So this is a bullish 15-minute confirmation. This closed at 10:15. So it's the 10 a.m. candle. We can then enter on the break of this candle high. So again, this is absolutely vital. We're not entering on the closure. We're entering on the break of the 15-minute bullish candle high. And this is going to be via a buy stop in the market. So we're not market executing. We're using a buy stop. We're going to place this manually above this candle high right here. And so what we're waiting for is we're waiting for price. So this next candle is going to open up. It's going to push. It's going to break this high. And we're going to be tagged long in this trade. So it's really important that we're using a buy stop in the market, because what happens, right? If price just rolls over, doesn't break the high, and then you've just entered a trade when momentum is not even stepping into the market. So when we enter on the break of the high, this is showing you that momentum is stepping into the market and buyers are in control, right? Because not only have they made one high, they've managed to make a second consecutive higher high in the market. And so that is step number 4. But to be honest, this pretty much means nothing unless you know where to place your stop loss and where to place your take profit. And that's why step number 5 is stop loss and take profit placement. Stop loss always goes below the manipulation low. This is your confirmation low right here, but sometimes this is not the low of the manipulation. So it's really important to note that your stop loss always below the manipulation. And I like to account for some spread in the market. So as you can see right here, the stop is 8.7 points. So for US 500, for ES, I like to add 0.5 to this. So that's going to be 9.2 points. And then in terms of take profit placement, which is again very, very important, because a huge problem that so many traders are facing is they're going for home runs in the market. They're going for these crazy trades, these massive risk to rewards. They're looking at taking huge pieces out of the market. What I want you to do is focus on taking small, repeatable, bite-sized pieces out of the market over and over again on a consistent basis. And what I like to do is I like to target a mechanical 1 to 2 risk to reward. This is not because I feel like it, but it's because this is what is optimal for this trading system. So I've backtested this system over hundreds and hundreds and hundreds and hundreds of trades. And what I found is the optimal risk to reward is a 1 to 2. And so I've done a lot of the homework for you. I've done a lot of the hard work, the dirty work. And so either you can take my word for it, or I encourage you to go away, backtest it for yourself, and you will see the same results. Okay, cool. So I was tagged long in this trade right here. And then it's just a case of setting and forgetting this trade. So there's no micromanaging, there's no interfering, there's no getting involved. Once you're tagged in a trade, it's literally set and forget, and you've defined your risk, you've defined your take profit, you know how much you're going to be losing on this position, and then it's just a case of allowing the trade to play out. You've done your work, you followed the plan, you followed the rules, you followed the system. It's now up to the market just to determine, like, is this a profitable trade? As you can see, we got a pretty strong push into profit right here. We had pretty sideways price action right here. And then we got a thrust through into take profit. Essentially what we have is quite an impulsive move to the upside. We then had some corrective price action where we pretty much went sideways. And then we got a further impulse to the upside, hitting our take profit and running the liquidity that is resting above the London session high. But it's not as simple as it looks, right? Because, you know, yes, we can play this out in hindsight. We can look at results. We can see that it flew straight to take profit. But you can see the market went sideways for literally 1 hour, all right? So a lot of traders, if they're emotional, if they want to micromanage, if they're not following a plan, well, they may have closed on this big bearish candle right here. they may have got bored or exited right here during this ranging market. Or if they don't have conviction in their system and their plan, they may have even closed it around here if they got bored or didn't think that the market was going to move to the upside. And, for anybody thinking that I'm cherry picking this trade, which to be honest is a fair assumption, here's the analysis that was sent ahead of time to the exclusive community. And here was the exact execution of this trade right here. And this was shared with all of my exclusive members and all of my one-on-one students. And so this is the simple 5-step trading strategy that I trade every single day in the markets. And so if you would like to learn more and you would like to see me trade this live every single day in the markets with my exact game plans, trade plans, executions, and you would like to learn more about this trading system where I share over 40 plus educational webinars and lectures, then make sure to check out my exclusive community or my one-on-one mentorship. The link is in the description down below.